Hi guys, today it is my absolute pleasure to welcome one of my friends, Mary Ann Bartels. It is an unusual time for some people maybe to be looking at investing in the cryptocurrency market, given everything we're seeing in the mainstream media. But I have never been a more firm believer that millionaires are made in a bull market and billionaires are made in a bear market. Now, I'm not suggesting that any of us are actually going to become billionaires overnight, but it is a very good time to start actually understanding the fundamentals of technical analysis. I am absolutely delighted to welcome Mary Ann. We are part of a group who studied with Kings of DeFi and London Real DeFi Academy with Brian Rose. We're now part of a group of very like-minded individuals that believe that decentralized finance is the future. Mary Ann is a recognized award-winning analyst from Wall Street who spent 35 years there in numerous positions with Bank of America and Merrill Lynch. She is an institutional investor, all-American ranked research analyst, and for 6 consecutive years, and she is now pivoting her career to look at cryptocurrency and decentralized finance. Mary Ann, would you like to tell me a little bit more about your career history and what brings you to cryptocurrency?
Sure. And thank you so much for having me, Rachel. And I'm just delighted to do this webcast with you. I found myself on Wall Street because my dad's baby sister, which I affectionately call Aunt B, and her name was Bernadette, went to Wall Street in 1956. And I wound up following in her footsteps. And so I wound up spending a career of 35 years total on Wall Street, 22 of them at Bank of America, Merrill Lynch. And in one of the roles, because I had many different roles at the firm, one of my roles was running the technical department. And my aunt was a very well-known and famous technician, and she's the one who trained me. And what I found when she started showing me charts when I was a teenager is that I just had a natural ability of recognizing patterns within the charts. And I think we're going to talk a little bit later about those charts. So I won't go into all detail right now.
Tell me a bit more about your aunt. She sounds absolutely fascinating.
Oh, Aunt B was a trailblazer and a pioneer on Wall Street. She ran almost every organization that was out there. And she was really a very feminine woman, which you wouldn't expect a very feminine woman to be very successful on Wall Street. But she had a wonderful way about her that made the men in the room feel good. And whatever that was, like magic. And she really had the ability to teach herself. Nobody taught her technical analysis. She had worked at a firm and was talking to a client who happened to be in Canada, because you're in Canada, happened to be a Canadian client. And the client was doing so well trading, she finally got up enough courage and said, "How are you picking these stocks?" And that client explained that they use technical analysis. So she went out and she bought books. She actually taught herself technical analysis. Then she started writing her own newsletter, giving it to her boss, just doing like a little market commentary. And the next thing she knows, her boss is running into her office saying, "Bernadette, what do you think about the markets? Because the clients want to know." So he started sending it out to the client base. And that's how she started building her business.
And we talked about, or I mentioned there, your ranking. So for people that don't really understand technical analysis, how would you explain what your job actually entailed?
So in fundamental analysis, I'm going to talk about in fundamental analysis, you're evaluating an income statement, a balance sheet, you're looking at earnings, and you're looking for projected earnings, and you're looking for valuation. Is the price cheap, expensive? In technical analysis, we actually look at the price chart. So we're looking at price behavior. And a lot of people feel that that's kind of like reading the tea leaves.
Yeah.
But what's very interesting is price is never revised. Earnings do get revised.
Yeah.
And what you really pick up in price analysis is human behavior. And human behavior is really fear and greed. And out of that fear and greed, you see it reflected in the prices. Certain patterns have evolved over time. And we recognize those patterns as either being positive or negative or bullish or bearish. And I've always said that if you can do technical analysis and overlay fundamental analysis, meaning that you're getting the same signals at the same time, that it was a very strong confirmation that that trend that you were seeing was likely to evolve.
Yeah.
Now, does it happen 100% of the time? Absolutely not. And, not everybody gets the earnings right, on the companies. It's neither one. I've always said you have to find what works for you. What are you good at?
Yeah.
Or find that person that you feel is doing work that you feel is authentic and reliable.
And for anybody now, so I would imagine that a lot of people that are going to watch a video like this, they're probably going to be maybe kind of early investors, maybe, not even at that point where they've had the, they don't have the knowledge to get there. And I think there was a quote somewhere that says when there's blood in the streets, that's when, I think it's probably Warren Buffett actually, but it's something to do with blood in the streets. And sort of that's basically when, when you see other people's fear, that's when you buy. And when you see other people's greed, and I'm probably mixing about 1 million Warren Buffett quotes up there. But the whole premise of what I'm trying to say is, at the moment, things aren't looking good. We would say that we are in a bear market, and that a lot of people have probably got cold feet. They're a little bit nervous, or they're really kind of thinking, oh, I'm really glad I didn't jump into that. So, in your experience, applying your experience to, your previous roles on Wall Street, and then looking at the cryptocurrency market now, what would you say?
Well, the first thing I should say is I'm not a financial advisor, and I never was a financial advisor. I am not licensed to give investment advice. What I can talk about is my experience and my personal opinion.
Of course.
Bear markets are just a function of markets. You wouldn't have a bear if you didn't have a bull.
Yeah.
Right? They're complements. There's many bear markets. I have been through many bear markets. My first experience on Wall Street was the crash of 1987. So I was in the business only for a few years, and all of a sudden the markets had a crash, and it was not a good time on Wall Street. And a lot of people were scared. A lot of people lost their jobs. Some people thought that the markets would get worse. Some people felt the markets wouldn't come back. It was a very, very scary time.
Yeah.
Believe it or not, Rachel, by the end of the year, the markets actually closed to the plus side. Now that's an extraordinary example of a bear market, because what really drove that bear market really wasn't fundamentals. There was a trading program called portfolio insurance. And what happened is we had no floor on the market because everybody just kept selling. We, at that time, didn't have a way of stopping transactions to slow down the market. But even after that, I went through a bear market in 1990. I went through a bear market in terms of the S&L crisis. We saw that go bust. There was a housing cycle that was negative. There was a hedge fund that almost went under called Long-Term Capital in 97. We had the Russia default crisis in 1998. We had the tech bubble, and then we had the tech bust of 2000 to 2002. We've had flash crashes. In the equity market, we've had a ton of bear markets, and of course, the famous financial crisis of 2008 and 2009. And in every case, we've recovered. Now, have there been investors that have lost a lot? Absolutely. Have lost everything. But this is where they start talking about diversification. Don't put all your eggs in one basket. Make sure one trade doesn't blow up your portfolio.
Of course.
And in the crypto market, if you just study Bitcoin, because Bitcoin is really the majority of the space. If you really study the price action, the price history of Bitcoin, it is very common for that coin to go down 80%.
Yes.
I have found crypto to be the most volatile asset class I have ever seen.
Do you find that exciting?
So yes, I do. Not when it's down, but I am excited because I don't have too much exposure, and I'm very excited that I'm going to get very cheap prices.
Yeah, that's me too.
Right. So I'm well positioned. I do have some exposure, but not exposure that's really going to hurt me. I have part of my exposure is staked, where I'm earning some income, and I had a good sense that this could happen. So I'm totally relaxed about it. And again, we recently just had in the crypto space a big blow up. with Luna and Terra and UST. Yeah, I don't know if that's going to come back, but in every bear market that I've experienced in the equity market, in many cases, something blew up that didn't come back.
Yeah. And I think there's been some analysis done as well that says that, ultimately, I think people have this, well, first of all, I think people have this concept that they can put some money into crypto and they're going to make money immediately. And I think there was some analysis done that sort of showed the kind of behavior of retail investors, and that over, if people invested long-term over a 4-year cycle in sort of solid blue chips and, really solid projects, which we'll sort of come on to in a little while, but that they didn't lose money. This market is for long-term investment, just like any other decent long-term investment that you would make, outside of decentralized finance.
That's correct. And there's something that's called dollar cost averaging.
Yeah.
Where you slowly accumulate over time.
Yeah.
And to be diversified. Again, don't hold everything in a very concentrated position, because, as I said, the crypto market is the most volatile. It's not proven yet. We're still going through growing pains. Yeah. And I really want people to go back and remember the tech bubble. In the late 1990s, everybody was so happy because, very similar to what Bitcoin and Ethereum and the other altcoins were doing, is going up exponentially in very, very, very big percentage terms. And then all of a sudden crashed, and many companies even went out of business during that time frame. But that was really the beginning stages of the growth in the internet. In fact, after that was tremendous growth and opportunity investing in technology. And I can remember in 2002 and 2003, when we started to see certain tech names really bottom out, you couldn't give a technology stock away.
Yeah.
No one wanted to be invested in technology. No one thought technology would ever come back. And look at where we are today in technology. People thought semiconductors were a commodity and semiconductors would never come back. Now we have shortages and very high demand for semi chips. So, the waves and the cycles are very, very extreme. In fact, Aunt Bernadette always told me that. She said, when the times on Wall Street are good, she says, they're gluttonous. And she says, when it gets really bad, she says, they just, take everything away. Total famine, perfect word. And, there's a good chance that we're not finished in this bear cycle.
No.
But this is a great time to really, look at a strategy, start learning, because I believe that we're in a cycle of technology. And what I mean by that, if you study the macroeconomics of the United States going back to the 1500s, and what drove our economy and many economies around the world was agriculture.
Yes.
Right? In the 1500s. The technology back then was the sundial.
Yeah.
Right? Sun was very important to crops. Then we came along in the 1700s and we created the steam engine, the combustion engine, and we created railroads.
Yeah.
And rail completely changed our economy. So from, I would say, the 1700s to really the 2000 periods, we were in an industrial period of major growth.
Yeah.
What happened and we mark it around 2000. In 2000, you really started the internet. That was the first phase of the internet. And when you look at how long these macro trends last, they last for hundreds of years. They have waves of cycles.
Yeah.
And I really truly believe we're in this new technology wave. And that's why you're seeing the growth in crypto. You're now, metaverse is becoming a common term. NFTs are becoming, non-fungible tokens are becoming a common term. And who knows what's going to be coming in the next 20 or 30 years. I mean, where we're going.
We can't even conceive it, can we? That's the point.
No. And even trying to understand email in the 1980s, you wouldn't be able to conceive it, right?
Yeah.
And there, even in the early 1990s, when you had email, that was really the first application that actually went on to the web.
Yeah.
And so people thought email was the internet. but it wasn't until they got other applications that they understood that. We're kind of almost in that stage in crypto.
Yeah.
We're trying to figure out, right? We have the Ethereum platform, but we found, and the platform that Bitcoin is on, that, that's an energy intensive process. And they've come up with another process to make it a little bit more eco-friendly, less expensive, certainly in bringing down transaction costs. And we're talking about proof of work and proof of stake. These are all very, very, very early stages. So I think if you can take a 10, 15, 20-year time frame, where we are over that time frame, I think is going to be mind-blowing.
Oh, I mean, 100%. I'm always sort of saying, and I think I probably said in some of the previous videos that I've posted, we talk about Bitcoin, Ethereum, AVAX, Solana, Cardano, all these networks. The reality is these guys will probably always be around. Well, we think they'll always be around, but, the future of the metaverse, Web3, etc., those new networks, they're just not even here yet. Because we're looking at ways to make Ethereum cheaper, to make Bitcoin faster. The reality is somebody will come along that manages the holy trilogy, right? The security, the speed, and the ability to be cheap and easy to build on. And once that's mastered, that is the future. And I guess that's probably the crypto that we're all hoping that we'll cash in on.
Yeah, I think we've all gotten tired of not being able to do certain things within the financial system. I even know when I'm trying to even buy crypto, my bank limits how much money I can actually take out of my account. And I'm like, who the heck are you to tell me how much I can
spend my money on that?
Exactly. Kind of like ticked me off. I think we all want a certain form where we can be in control. But many of us have fear because we're so used to other companies helping us with our passwords and ensuring our assets from a catastrophe.
Yeah.
So that's kind of built into the system. But I find as you go down generations, they don't have that fear because they haven't really grown up in that system. They're just coming into a system and they're seeing a system that they don't like.
Yeah.
And they're trying to find a better way of doing things. And that's the whole purpose of DeFi. And it's going to be interesting how this evolves. And the financial system needs to really understand and wake up. Many industries have been disrupted. Retail is a great example, right? If a retail company didn't have an online platform that consumers could use, they struggled.
Oh,
right.
100%. I mean, that's actually, I mean, I recruit, right? I recruit finance into sectors like retail. And, I can think of a number of UK retailers in the last 5 years alone that have gone under because they didn't digitalize their products and their offering to the market fast enough. It's a real shame. There's some obviously real heritage brands in the UK, and I'm of course in the US as well, especially with COVID. I mean, that just accelerated the need for that. So if people have been late to the party with doing that, then absolutely.
And kind of created technology. Zoom, kind of was there, which is what we're on right now, right at the right time. And so I really think the financial industry needs to pay attention. I think they are. I think they're trying to learn and how to figure it out. And I don't think anybody really knows how this is going to work. What I do know and have high confidence in is there is disruption, and DeFi is that disruption, and there's investment opportunities for sure.
Absolutely. And just before, I would love to go back to TA in a moment, because I'd really like your advice for people who are looking at, how they start and what they should be looking at to start off actually really understanding the basics of the market. But before we do that, I touched on at the beginning the fact that we both have this view that decentralization is the future. And a lot of people will be getting confused between cryptocurrency and this idea of centralized bank digital currencies. And, obviously coming from my perspective, I'm sure yours as well, my understanding of a centralized bank digital currency is that the government has ultimate control over, what you're spending, how you're spending it. You could be earning money, but if you're paid digitally, they can perhaps stop you going on holiday, or, depending on where your beliefs are aligned and what social class you're in and all that. And obviously that sounds kind of extreme, but it, we do see that in other areas of the world. How would you differentiate cryptocurrency? And do you think that there's a true future for cryptocurrency when the banks are obviously so keen to centralize things themselves?
So 85% of central banks around the world are looking at this and trying to figure out what their own cryptocurrency, crypto coin will be. And every agency in the United States is taking a look at that. In fact, our president even wrote a presidential order to have all agencies to be looking into this crypto space.
Yeah.
They realize they're about 10 years behind, right? And now they're trying to play catch up. And what we're hoping is, we know regulation is coming. There will be some form of regulation. There will be central banks that issue their own currency, their own coin. But right now we have no way of knowing what that picture is going to look like. We have an opportunity to be leaders and to be able to get this right, and not have a lot of controls over it. And that, of course, that's always in my visions when I'm meditating, is that, the world gets this right, because it can be a beautiful system if it's done correctly. But if it's not done correctly, it's not going to be possibly not as good as it can be.
Yeah.
And I think there's obviously going to be growing pains.
Of course.
What recently just happened with Terra and UST will unfortunately be an example to regulators as to the risk and the need for regulation.
Of course.
I mean, that's that just goes unsaid practically. But no one really knows how this is going to play out. And I'd like to really believe that we can create an open platform where people are protected, but able to move in their own way, in the way that they want to.
Yeah.
Right. In their own individual, as I said, I'm limited by my bank on how much they tell me I can put in based on my bank account. Well, I have other accounts and I can get money in, and it's a hassle, but I shouldn't have to do that.
And do you think, I personally believe that it's a responsibility of individuals to really take an interest in this. I think, we have a habit of generally, especially I sound like my mum now, but in this day and age, of being a little bit complacent in regards to, we can't change this and we can't do that. And, there's no point in doing crypto because there's going to be a digital currency anyway. Would you encourage people to take, even if they're not going to invest, to really take note and take heed and actually try to influence as much as they can, how these digital currencies are adopted?
Oh, absolutely. And the real shame in the world is we teach math and we teach reading, and we don't teach people how to do their finance.
Absolutely.
At least here in the United States, there's many individuals that don't understand, if you take out a certain amount of debt, what kind of income level you have to even support that debt.
Yeah.
And they're just naive, and they're very smart people, but they've never been taught finance.
Yeah.
And you need to understand finance.
There is this whole I think I see it myself. This whole ethos of, free money, like free money. I've got a credit card on 0% and I can transfer it to this other credit card at 0%. And hey, I did that myself in my 20s. I'm fortunate enough to not be able to, not to have to do that now. But that mindset of I can get this free money. But of course,
nothing's free, Rachel.
No. And I think, and that reality, I think, has never been starker. And from my perspective, looking at, what I'm seeing in the markets now, from talking to you guys, every week, and just generally, being a lot more switched on, I think we've got a really rough ride ahead of us over the next few years, and people that have overexposed themselves, might see themselves in a lot of trouble, and now really would be the time to start actually addressing that and thinking about where they keep their money, what they're doing with that, if there's ways that they can kind of redress the balance a little bit.
Absolutely. In fact, yeah, I did in my undergrad, I majored in finance, and I did have a couple of good professors that, taught us the lessons of leverage debt, and how you don't want to do that. And compounding, a very important concept is compounding. where if you earn something, even if it's a dividend and you keep it in there and you accumulate it over time, it may take 20, 30 years, but $10,000 can grow if you're invested in good, high quality companies, can grow to numbers that are mind blowing. Now, I think crypto is trying to offer the same opportunity in terms of staking. And here's the other thing. I did a lot of presentations in my lifetime. I'm amazed, since we're both women, I can talk about this.
I'm sure.
Many women, especially if they have children and they're working, their to-do list is so long that even if they're highly educated and smart, even if they do work in the world of finance or even in the C-suite, they will pass that financial checkbox to their partner.
Yeah.
Just to get something off the list. But it is very important that you understand what your finances are and what's actually happening. And what I learned is you can learn it, because it's like learning a new language. You have to learn new words, new terms. Yeah. And this is what happened when I went into crypto. I said, am I really going to do this again? Because I had to learn Wall Street. And then one of my second job on Wall Street was working with a technology analyst. And tech was very new. There was no dictionary of terms of technology. I had to learn all this new language. And that's what it felt like when I went into crypto. And I went into crypto last October. I said, I need to learn this. And I joined the London Real Academy. And I joined because Brian had worked on Wall Street. I worked on Wall Street. I said, I'll understand the trading aspect in the whole market. And he does a terrific job doing that. And I said, do I really want to do this at my stage of my life? And then I said, Mary Ann, I said, the one thing I always admired about my aunt, and she worked up until the age of 80.
Whoa.
I was always impressed with how she would always learn something new. Could you imagine Aunt B coming to Wall Street in 1956 and learning how to use a computer? Right? For her, that's a huge leap.
Yeah, of course.
Huge leap. And of course, we had different technology to look at the stock markets. When Aunt B started, she looked at a ticker tape. She literally walked over to a machine, used to pick up the tape and read it off to the trading floor. That's how they got their news. There was no big fancy screens that had it. So I said, Mary Ann, Aunt Bernadette always told you that you had to always adapt and learn. I said, you need to learn this, because in my heart of hearts, Rachel, I know the system is changing and I don't want to be left behind. But more importantly, I don't want my children to be left behind.
Well, it's interesting. I mean, I came to it last September, October, and I didn't know either. So I knew nothing. I knew nothing about the stock market. I knew nothing about the technology, nothing about cryptocurrency, nothing about any of the technical terms. So I've had to learn both. And I still got a way to go.
Oh, you've done a fantastic job.
Well, you have to do that. You're my friend.
You have done a fantastic job. It's a hurdle, but it's a hurdle that's doable. And I think massively. That's what's important. It is very doable. You can learn it. Now, when I had to learn proof of work and proof of stake, I swear, Rachel, I had to work on that for days to remember which one was which. You know, my brain still works, but it didn't. I used to be able to memorize like in hours. This time, it may have taken me like 3 days to figure it out, but that's okay. You can learn it. And if you can find somebody that can just explain it in terms, I think a lot of it comes in how the education is presented.
I was going to say, it's interesting, isn't it? Because I think, you know, the one thing that's really struck me is that although we certainly, you and I and our group really want to make cryptocurrency in the markets much more accessible to people, the language that's used is probably the biggest barrier for most people sort of entering the market, you know, whether that's understanding the technology and how complex that can be, or whether it's actually just, you know, understanding how some of the TA stuff works. Going back to TA, because I feel like, you know, that is a specialist subject and it is really, you know, one of the areas that you absolutely shine. If you were going to, you know, say you were going to give some advice to people that are new, which indicators would you suggest are, you know, a good place to start?
So that's a great question. I used to get that question all the time. And the answer I gave, nobody wanted.
It's going to depend for yourself what you.
Well, it does depend. That's part of it. But what I want people to realize that every indicator is based on price action, right? It's a derivative of price of some form. And what I learned from my aunt very early on was to understand price and price behavior. Like look at a chart, because there are defined patterns and that are bullish and bearish. And that was a skill I was able to really hone in on, is I can look at a chart and recognize patterns. Now, sometimes other technicians I worked with would see different patterns. Here's the thing about technical analysis. You can have 2, 3, 4, 5 of us in the room and we'll all say something different. That can happen. I've seen it. But I learned if I looked at price and I really had a good feeling about the price pattern, didn't matter what the indicator said. It was relevant. Or I used the indicator to let me know if something was overbought or oversold within the price action. But once you become an expert, you can pretty much figure out what the indicator is going to say. So indicators are very helpful when you're learning technical analysis or TA. The one that I relied on the most is not the one that you hear about all the time, which shocked me, especially when we were in class. Nobody was mentioning this indicator. I'm like, you gotta be kidding me. Because I found it and I back tested. I've been a quant. We back tested a lot of indicators. I was kind of like a quantity technician. Is we use something that's called stochastics. And I use the fast stochastic. And I found that to be extremely helpful. You hear about RSI all the time. And I'm like, not my favorite. Not even my second one. My second one would be the MACD. It's called moving average convergence divergence. So number one for me was stochastic. Second was the MACD. Then I would look at RSI. But what I found was very helpful, if I lined up all three of them and all three of them had the same signal, that was very confirming to me. So it's an art. I find technical analysis, there's an art to it. And you're either good at it or you're not good at it. And if you're not good at it, that's okay. You know, maybe you're good at some form of fundamental analysis. Right. Everybody has to find their own little box, and I think their own little toolbox.
I think my experience of TA, you know, obviously is extremely basic. So I'm not going to talk about it in any great detail, but you know, websites that I would use, I think you use stock charts, don't you?
I use stock charts because I know the founder. His book was the Bible when I came up in the industry. His book, Technical Analysis of Financial Markets, was considered the Bible. Because it's written in plain English, and he really explains technical analysis in a very, very understandable way. And he was a futures trader. And so he uses a lot of futures in his analysis, not necessarily stocks, but you'll definitely understand the fundamentals. The other reason why I like that platform is there's a portion of it that's for free, but then if you pay, then there's different levels. They have what's called Chart School. And you can really learn a lot by just using their website. So you don't even necessarily even need the book. If you go up to their website, and it was the first charting package that I used outside of Bloomberg, which is a very expensive, more institutional based platform. And then there's TradingView, and TradingView
I use TradingView mostly.
TradingView is very good and has a great database. So I interchange them, but I sometimes default, just because out of habit, to stockcharts.com.
And I was going to ask you something else around the. No, it's gone from me.
There is something I did want to add, if you don't mind.
No, go ahead.
For anyone that's out there that invested and they've lost a lot of money, and I know there are people out there and they're going to feel silly, they're going to be stupid. It's really all good, right? And it's good. And in many cases, when there's young people investing, I want them to lose money, not because I really want them to lose. I want them to understand there's risk. You have to understand risk. and how to manage a portfolio based on risk. It's educational. You can actually grow and learn from failure. In fact, many of us learn by failing at something. It never feels good, but it doesn't mean you're stupid, doesn't mean you're an idiot, and it doesn't mean that you're not good, and it doesn't mean you won't be good in the future.
Well, it's so interesting because I was having a conversation with my friend Claire this morning, and we were just talking. I said, "Oh, have you seen?" I think I said, "Oh, have you seen Ethereum sort of at 1,500?" And we were both like, "Oh, I wish we had more money spare. We could buy some." And I sort of spoke to somebody yesterday and said, "Oh, AVAX is at like £22 or something," and he messaged me this morning like, "Oh, it's back up," and I was like, "Don't worry about it. It's going back down again." And you know, if I think I bought a lot of the currencies that I have, I bought them at their all-time highs. And when the market, because we've been in a bearish cycle, I think, for a while now. I mean, obviously,
it started last year.
Everything's kind of dropped off a cliff sort of more recently, but, you know, I was already sort of operating probably on sort of 50% of maybe what I invested. And certainly, I mean, my boyfriend's like, you know, you're not making any money doing this. And I'm just like, it's fine. You know, I'm here for the long haul. I'm here for 2, 3, 4, 5, 10 years. And, you know, if you were to talk to anybody else in our group, most of them have lost money, bought at all-time highs, you know, and have been burnt a couple of times. And, you know,
and they've been through the cycles. They came in, they went through the bear market in 18.
Yeah.
And they didn't leave. They're still here. So yeah, you should always have some we used to call it dry powder. It's always good to have a little bit of dry powder. So when things like this happen, you can take advantage. And yes, this is how the big players make money.
And you just have to, I mean, I sort of joke about it, but I always say, oh, everything's on sale. And I think that's the mindset, is not to panic, not to worry, and to just sort of, as I say, sit on my hands. Because when I first got in, I think everything was going up and I was like, oh, I'm going to miss out. I'm never going to be able to afford Bitcoin. I'm never going to be able to afford to invest in any of these currencies and protocols. And now, obviously, I can definitely afford to invest in them, and now is a great time. Not necessarily right now, but certainly, you know, because I don't think we've seen the bottom, have we?
No, and I'd like your listeners to understand what's happening on a fundamental basis. Everybody knows about all the money that's been printed, right?
Yes.
And a lot of people have been very upset about governments and how much money they printed. Well, if you give away free money, risk assets go up. People spend the money, right? And now when they start taking the money away as they raise interest rates, and interest rates are going up around the world, right? And the Fed really hasn't even tightened in terms of taking physical money out. They're raising rates, but they haven't really even, well, that taking money away, that hurts risk assets. And so things go down. So the fundamental cycle is they put out a lot of money, everything went up. Now they're taking money out, things go down. It's literally that simple.
Yeah. And it's been done 1,000 times. Well, maybe not 1,000, but not far off. Hundreds,
it's been
at least.
Hundreds of years. And crypto is no exception, even though it's decentralized. If people have money, they spend it.
Yeah.
So we have to get through this cycle of global central banks tightening. Now, my sense is we still have a few more months of volatility. Yeah. I'm looking in technical terms, it's called capitulation. You know, we'll use silly terms like throwing out the baby with the bathwater. How anybody came up with that term is beyond my comprehension.
Well, actually, I actually know about that.
You do? Okay, but probably for another video. But when you see volume spike, this will be very important. When you see, let's say, Bitcoin sell off, and volume get as high as previous sell-offs, or maybe even I would like to see it a little bit higher. That's everybody purging and selling. Yeah. And that tends to be a sign that you've either reached a bottom or you're close to a bottom. Yeah. But it doesn't mean that we're going to take straight off again.
No.
If you look at even some past cycles with Bitcoin, it can trade sideways for a while. In fact, it could trade sideways for a year,
a long time.
2 years, for a long time. But those are periods where you want a dollar cost average.
Yeah.
You want to slowly go into that.
I just remembered what I was going to ask you earlier when my mind went blank. I wanted to ask you, we've talked about indicators, but if you were just starting out and you were looking at the charts, what would you look at? Would you look at Bitcoin? Would you look at ETH? You know, are you going to look at Bitcoin against the dollar? What are you going to look at?
So the blue chip is Bitcoin and ETH for sure. Those are your two blue chips, and Bitcoin is the majority of the market. So they're very, very critical. So and yes, you can and I didn't come up with this, some other people did, and it's fair, because what we do in the equity markets is we'll take what we call the sectors. They're called GIC sectors. So we'll look at technology versus the S&P.
Yeah.
We'll look at financials versus the S&P, retail versus the S&P. So what people are doing in the crypto world is they're using Bitcoin as a barometer, like the S&P 500.
Tell
and they'll look
what that
at
is, because I'm sure there are some people that don't understand that.
The S&P 500.
Yeah.
So the S&P 500 is an index here in the United States. It's made up of 500 companies.
Yeah.
And when we basically say the markets are up, 1 or 2%, they're quoting the S&P 500.
Right.
So it is your blue chip barometer of what the market is doing overall. And then when we're looking at returns, portfolio returns, we're always comparing it to the S&P 500 return.
Yeah.
So what people are doing in the crypto space is kind of taking that concept from the equity markets and applying it to the crypto space. So they're using Bitcoin as the S&P 500 as their blue chip. And they'll say, okay, how is Ethereum doing relative to Bitcoin? Or how is other coins, whatever coin they're looking at, relative, to see if it's doing better or worse.
Yeah.
And the concept is, if you're doing better than the blue chip, you want to own that.
Of course. And
that's kind of, and if it's going down relative to the blue chip, it's not one you want to own.
And I believe I'm right in saying that Ben Cowan, who has a YouTube channel, marks everything against ETH, because I think over the last, although Bitcoin is predominantly the sort of stronger, more established blue chip, and it's more decentralized, etc. ETH, a lot of things bleed against ETH, and I think ETH outperformed Bitcoin over the last maybe 2 years.
It has, and technically it does have a stronger pattern, and that's totally fine. Whatever barometer you want to make for your blue chip, is totally fine.
I guess consistency is the key, isn't it? So that you can actually spot the patterns, because that's gonna help you familiarize yourself and really give you that insight over a longer period of time.
Exactly. And then, other indicators to look at are moving averages. When I came up in the business, nobody used moving averages as support and resistance.
Right.
But now they do.
Yeah.
And it's a self-fulfilling prophecy. If everybody's looking at certain levels, then those are going to be in important levels. And so those are other indicators that people can look at for trends. But the whole concept, you have to remember, when technical analysis was created, there was no computer.
Yeah.
So everything was done on accounting sheets and by hand.
Yeah.
So they wanted to have a sense of what the pattern was like. So they created moving averages. Yeah. So you have a simple moving average, and then you have exponential moving averages. And it's just to understand what the wave and the pattern was. It was never originally designed as support and resistance, but as time has happened, many people in the industry are using moving averages as support and resistance.
What periods of time would you plot your moving averages against?
Depends on what your time frame is. If you're a trader, you're using 10 and 20 weeks.
Yeah.
If you're a long-term investor, you're using like 200-day moving averages, 150-day moving averages.
Yeah.
Much longer term, you're looking for a much longer term pattern. Again, there's no right or wrong answer. It's, you create your toolbox, and it's the toolbox that works for you. I mean, there's other indicators that I used. I use Fibonacci's, but I learned Fibonacci later. I had a funny story. I was in the technical department, and there was another technician and myself. And I did my way of getting at price, and he did his way. And he was showing me all this Fibonacci stuff. And I said, oh, you're crazy. That's a crazy indicator, blah, 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 blah. I said, what level did you get? And I go, you got the same level I did. And we repeated this over and over again. He would get the same number I got, but we did it completely differently. And he did it using Fibonacci. So I became a really big fan of using Fibonacci levels. But again, there's an art to it. What's your low? What's your high? Over what time frame? So everything, there's an art and a skill to TA. It's not a simple 1, 2, 3, this is how you do it.
And look, moving away from the TA and back to the crypto side of things, you said that you don't want to get left behind. You don't want your kids to get left behind. But outside of that fear of being left behind, what do you find exciting about this space?
That I can be a part of a whole new paradigm shift.
Yeah.
I really feel that this is a paradigm shift. People call it Web 3.0.
Yeah.
So it's the next generation of the internet. To be a part of that and to be a part of educating people so they can be a part of it too.
Yeah. And
that's what really gets me energized.
Would you say that this industry, this space, the future of this entire forum is more accessible than perhaps Wall Street and
it's absolutely. And that's probably the biggest thing you just brought up. Anybody has access as long as they have a phone, right? You don't even need a computer. You can do all of this on your phone. And this is why the emerging markets have adapted it so much, because they don't have access to banking the way developed economies have. So the beauty of this is everybody has access. The other thing is, even though the prices are really high, you can buy shares of something. You can buy a piece of it. You can't do that in the equity market.
Yeah.
Whatever the price is, the price is.
Yeah.
So a beautiful development was creating this fractional ownership.
Yeah.
So everybody can have a piece. Basically you need $1.
The barrier to entry is just so much lower, isn't it?
So much lower.
Almost non-existent. I mean, some people have said, oh, I don't have any spare money, like it's not worth it. And I guess the one thing I've said to people, and I think I've probably mentioned this in other videos, is you don't need, you'd spend probably, I mean, people buy alcohol and cigarettes and gas. I mean, we won't talk about gas right now, but but so many other things, so many other sundries that you probably don't need. Even if you just put that money in a jar for a couple of weeks, you'd probably have enough to enter.
Absolutely.
Because some of these things are some of the quite interesting for me. There's some quite interesting cryptos that I'm particularly interested in, like AVAX. That's previously been at sort of $80, $100, $110, and it's $30, $40 now. Hex, which is one that a lot of people are quite interested in. I think that was at something like 11 cents or 11, so low. So I don't think people realize when they just look at Bitcoin and ETH that actually, first of all, you could buy, if you really wanted to, it's probably not worth buying $20 of Bitcoin, but you can really enter the markets at quite a low level.
Right. So, and the reason why you said you probably don't want Bitcoin is that that's gone up an extraordinarily large amount, and it's a big number. That there's other investments, and they're really software companies that are much lower priced, that have the ability in percentage terms to potentially, if their technology is adopted, to go up a lot more.
Yeah.
So that's really the key. But again, I think people need to learn, you need to be diversified. And if you make a lot of money, you don't necessarily want to sell it. You want to save. We need to learn the concept of saving over time.
Yeah.
To build a nest egg. Because I see so many people that get close to retirement and they don't have money to retire. And the time to start saving, and I know it sounds ridiculous,
as soon
as you start earning any money, you should take a portion of it and start saving it.
One of my favorite people that I think Brian Rose interviewed was Lynn Alden. I don't know if you've watched that interview, but you can get a newsletter from Lynn Alden, and she started investing at something like 14. And she's a self-made millionaire. She's younger than me. And she's done that through her investments. She even left.
She understood the power of compounding.
She's unreal.
I did see that.
And she has a fantastic, I guess it's not even a graph or a chart. It just shows you, if you invest X over X number of years at this very average percentage, how you can really compound your earnings, and how literally anybody can be a millionaire. And that was one of the most exciting things that I ever looked at, because I always shied away from, I wasn't bad at maths, but I was a word girl, right? I like.
Yeah, but if somebody showed you that chart, you would have understood it.
100%.
Even if math was not your thing, you would have understood that chart.
I've always liked money.
Can understand finance.
I've always liked money.
Now here's the key. You can't touch it. That's the key to compounding.
Yeah.
Is you can never touch that money, because then you lose the power of compounding.
Yeah.
And Rachel, I can't tell you how many times I have seen people even dip into their retirement accounts.
Yeah. Oh, yeah, 100%.
And that just does it, then you just lose that whole power. So you have to be disciplined. That's another big key is you have to be disciplined.
Yeah. Great. Is there anything else? What were we going to say?
I would say this is just super. I want to do this again with you. I think we can create our own channel together.
Maybe we should have a podcast. Like maybe we should.
I think we should. I think we might. I think we should talk about that when we're done.
When we should. And to be honest, there's probably I know we're aligned on a lot of other things outside of the finance side of things. There's probably lots of things we could talk about.
I think so.
Is there anything else that you want to talk about today, or that you think we've missed?
I'm sure there's a lot that we can talk about. This has been a long little cast, so I don't want people to, have to do another 5 or 10 minutes, but maybe we can find something to do in another video, or maybe do a little kind of teach-in of TA.
That'd be amazing.
Or, TA kind of 101.
Yeah. I think that would be really useful, because I think when people are, I know from my perspective, the first few times, I mean, I obviously did this with Brian Rose, and we had very interactive tutorials explaining the charts, looking at the charts, having somebody talk through the charts. And it would be, for me, the biggest challenge for me was that Brian obviously worked on Wall Street, right? So when you or Brian talk about concepts, because some of these super basic things that are fundamental to what you do, they're still really complicated to people like me. So, when I was watching Brian's videos and learning about things, I was rewinding. So yeah, it could be really useful to have you kind of talk through it, and then me kind of maybe even kind of back that up with kind of like how I remember things and what I do, because that probably makes it a bit more accessible to people who are like, what the hell is MACD? Like, what's a relative strength indicator? Like, what do you mean? Like I got you to explain the S&P 500. So, I think, because there are definitely people out there who, I've got loads of girlfriends who are, in their 20s, and they're like, oh, I want to get into this. But, it does seem like the big barrier to entry is just getting over that first hurdle, that there is a lot of learning to do.
There's a lot of learning, but it's doable. And if you can find someone that can explain it in a way that you can understand it, then you should really jump in, because this is an opportunity of a lifetime. Not many opportunities happen like this.
Yeah.
So that's how I'm going to end it. This is a transformation of global economies.
Yeah.
And yes, it has a lot of volatility, but the technology of blockchain, DeFi, metaverse, NFTs, and we didn't even talk about all of that, is real. It's happening, and you want to be a part of it. You absolutely want to be a part of it.
That should be an advert. Thank you so much.
Oh, thank you so much, my dear. It's really truly a pleasure and an honor. And I thank you so much for doing this.
No, you were a delight. Thank you very much. I look forward to next time.
Bye.